I'm about to show you something that's happening right now in the villages that developers and real estate agents don't want you to know about. Everything you're about to hear is backed by public data from Zillow, Redfin, Realtor. And local market reports. I've linked the sources below so you can verify each number yourself. Now, let's look at what's actually happening in the villages. Home values dropped to $409,251. That's down 2.8% in just 1 year. But here's where it gets really interesting. The median sale price, the actual number homes are selling for, dropped 7.9% to $350,000. Now, I know what you're thinking. Markets go up and down, right? But wait until you hear what's happening behind the scenes, because this isn't just a little dip. This is something bigger. The home price forecast score, this is what analysts use to predict where a market's headed. It's sitting at 28 out of 100. To put that in perspective, anything under 50 means the market's going down. 28 means it's in serious trouble. And what's wild is, they're projecting severe declines through 2025 and 2026, which means we're not at the bottom yet, we're still falling. Now here's where it gets really crazy, and this is the part nobody's talking about. Right now in the villages, there are 69 homes in foreclosure. 69. These are people who bought their dream retirement home and now they're losing it. Pre-foreclosure properties make up 1.25% of all residential properties in the villages, and if you know anything about real estate, when foreclosures start climbing, that's usually a red flag that something's seriously wrong with the local economy or the market itself. But it gets worse, and I need you to pay attention to this number because this tells you everything about seller desperation. In Sumter County, where most of the villages is located, 34.5% of home sellers have slashed their prices. Think about that. More than 1 in 3 people who listed their home had to cut the price because nobody was buying at their original asking price. These aren't small cuts either. We're talking about sellers who thought their home was worth a certain amount, and the market basically said, no, it's not. And speaking of the market saying no, homes in the villages are sitting on the market for an average of 71 days now, 2.5 months. Compare that to hot markets like Miami or Tampa, where homes are gone in 2 weeks. And you start to see the picture. Sellers are getting nervous, really nervous, because every day that house sits empty, they're paying mortgage, they're paying HOA fees, they're paying CDD fees, and those fees in the villages aren't cheap. We're talking $150 to $200 a month just for HOA. And depending on the home, CDD-related costs can add another $150 to $180 per month or more. So you could be burning through $300 to $400 every single month. That house doesn't sell. No wonder people are cutting prices. But here's what's really interesting. The sale-to-list price ratio is sitting at 96.4%. What that means is homes are selling for about 3% to 4% below the asking price on average. So not only are sellers cutting their prices, but even after they cut them, buyers are still negotiating them down even further. That's a buyer's market if I've ever seen one. Now let me tell you about inventory, because this is where things get really interesting for buyers, but scary for sellers. There are currently 2,336 properties for sale in the villages right now. That's a lot of inventory, and analysts are forecasting that inventory is going to increase another 5% to 10% over the next few months, which means even more homes flooding the market, even more competition for sellers, and even better deals for buyers. The months of supply went from 2.2 to 2.3, and I know that sounds like a small change, but in real estate that's significant, because it means homes are sitting longer and there's more inventory piling up. When you've got rising inventory, rising days on market, and falling prices all happening at the same time, that's what we call a buyer's market turning into a buyer's paradise. But here's where the story takes a really fascinating turn. And this is something I've been investigating. Over the past year, 42% of people who were searching for homes in the villages actually searched to move out of the villages. Almost half the people looking at villages real estate were looking to leave, not to buy in. Where are they going? Palm Bay, Cape Coral, Jacksonville? These are the top destinations, and when I dug into why, it started making sense. See, a lot of people bought into the villages thinking it would be their forever retirement paradise, but then they got hit with reality. The HOA fees, the CDD fees, the deed restrictions that tell you what color you can paint your house, whether you can have artificial turf, what kind of decorations you can put up. It adds up, and people get tired of it. One homeowner told a local paper that the villages has power-hungry, controlling, and vindictive board members, and Florida State Representative Juan Porras actually called HOAs a failed experiment. That's a state representative saying that. When you combine the restrictive lifestyle with rising costs and now falling home values, people are doing the math and realizing maybe this wasn't the investment they thought it was. And speaking of investments, let me tell you what's happening just outside the villages that's making this whole situation even more interesting. Major developers like Coulter Homes, Ryan Homes, D.R. Horton, Pult, they're building massive new 55-plus communities right near the villages. Places like Hammock Oaks and Lady Lake, Twisted Oaks and Wildwood, Orange Blossom Hills. And here's the kicker. These communities don't have the village's HOA fees, they don't have CDD fees, and some of them don't even have the strict 55-plus age restrictions. You can get a brand new home, still be close to all the village's amenities, the restaurants, the entertainment, the golf, but without all the fees and restrictions. So now buyers are asking themselves, why would I pay $350,000 for a used home in the villages with $300 a month in fees when I can buy new construction nearby for similar money with way lower monthly costs? That's the competition the villages is now facing, and it's putting even more downward pressure on prices. Let me break down what this means for you, whether you're thinking about buying or you already own in the villages. If you're a buyer, this is probably the best opportunity we've seen in years. You've got sellers who are desperate, you've got prices falling, you've got 34.5% of listings with price cuts, which means there's room to negotiate even lower. You're in the driver's seat. Make low offers, ask for closing costs, ask for repairs, because sellers need to move these properties and they know it. If you've been watching the villages and waiting for the right time, this might be it, but don't rush in blind. Make sure you understand those HOA and CDD fees because they're going to be there forever and they typically go up, not down. Run the numbers on what your total monthly cost will be, not just the mortgage, but the fees, the insurance, which is high in Florida, the property taxes. Make sure it actually works for your budget long term. Now, if you're a seller or you currently own in the villages, I'm not going to sugarcoat this. You're in a tough spot. The market forecast shows continued declines, inventory is rising, and you're competing with 2,300 other properties plus new construction nearby. If you need to sell, you need to price aggressively from day one. Don't test the market at a high price hoping to get lucky because that 71-day average means you'll be sitting there for 2 months watching other homes sell while yours doesn't. Look at what's actually selling, not what's listed. Price below that, and be ready to negotiate. If you don't need to sell right now, you've got a decision to make. Do you hold on and hope the market recovers, or do you cut your losses now before it potentially drops further? That 28 out of 100 forecast score suggests more pain is coming, so you need to be realistic about your situation. Some people are going to ride it out and be fine, especially if you bought years ago when prices were lower. But if you bought in the last 2 or 3 years near the peak, you might already be underwater or close to it. Here's the bottom line, and this is what I want you to take away from this. The village's real estate market is going through a major correction right now. Prices are down. 7.9% foreclosures are climbing to 69 properties. More than a third of sellers are slashing prices, and the market forecast shows it's going to get worse before it gets better. This isn't doom and gloom. This is just reality. And smart investors and home buyers make money by understanding reality, not by believing the hype. If you're in the market, do your homework, run your numbers, and don't let anyone pressure you into a decision. This market favors buyers right now, so take your time and make sure whatever you do makes financial sense for you. The data doesn't lie, and right now the data is telling us the village's market is in trouble. What you do with that information is up to you.